Welcome back to Investing Talk podcast. We've got a fascinating one for you today. We're going to unpack Pure Storage, a company that's, well, really been making some noise in the data storage sector. We'll be looking closely at their upcoming earnings report using the stack of sources you provided. Our goal is to cut through the clutter, focus on what the experts are saying, historical trends, and basically give you the essential takeaways. Before we jump in, if this kind of analysis is helpful, please do consider subscribing, liking, maybe leave a comment. Your feedback really helps us shape these discussions. And hey, if you're enjoying the work, you can always consider buying us a coffee. It genuinely helps keep the lights on and fuels these insights. Plus, seriously, if there's a specific company or even just a pile of articles you want us to look into next, drop it in the comments. We love knowing what you're curious about. Okay, so Pure Storage, let's get into it. When exactly are we expecting this report, and what's the general, the buzz?
Right, so the earnings report for Pure Storage, it's scheduled for after the market closes on August 27th, 2025. That timing, always builds a bit of anticipation for the next trading day. And looking at the analyst consensus, the revenue expectation seems to be landing somewhere around, say, $870 to $880 million for the quarter, which lines up pretty neatly with their own guidance for the full fiscal year 2026, which they've put at $3.5 billion. And for EPS, earnings per share, the consensus figure is sitting at $0.40.
Okay, 40 cents. So those are the official numbers the street's looking at. But, you often hear about that whisper number, especially for companies that tend to beat. Is there any unofficial chatter?
Yeah, the whisper number. Good point. While there isn't like a widely published one for this quarter, the general chatter does seem to nudge slightly above that $0.40 consensus. Maybe expectations leaning a bit closer to $0.41, perhaps as 42 cents. It's not unusual when a company's been on a bit of a winning streak.
Right, the market starts anticipating another beat. And what about Pure Storage themselves? What have they officially guided for the full year?
Yeah, their FY26 guidance has been pretty consistent at $3.5 billion in revenue, a really big focus for them. And they talk about this a lot. It's expanding their storage as a service offerings. Management highlights how that flexibility helps them, navigate the wider economy. And they're targeting really strong growth there, high double-digit TCV, total contract value, growth in that specific SaaS area.
Okay, high double digits in TCV. That's definitely something to watch. So knowing what's expected is one piece, but history often gives clues. How has Pure Storage actually done against expectations in, say, the last 4 quarters? And maybe more importantly, how did the stock react afterwards?
Well, looking back, their track record is actually quite strong. They tend to beat expectations. Yeah. Like in May 2025, they reported $0.29 EPS versus a $0.25 consensus. That was a solid beat. March 2025, similar story, $0.53 versus $0.49. Beat again. Go back even further, August 2024, that was a big beat, $0.25 EPS when the consensus was only $0.12. December 2024 was the exception, kind of an inline quarter. They hit $0.50 EPS, exactly matching the consensus. So mostly positive surprises.
Mostly beats, okay. But did the stock price always jump on those beats, or was the market reaction a bit more nuanced?
That's where it gets interesting. The reactions have been quite varied. After that May 2025 beat, for instance, there was a small gain, but it only held for a day before, reversing, partly due to weakness across the whole sector. March 2025 saw an initial pop, but then it sort of faded moderately. December 2024, the inline report, not much happened with the price, as you might expect. But that big beat back in August 2024, that did lead to a pretty sustained uptrend after the earnings came out.
So a beat doesn't automatically mean a sustained rally. Other factors clearly matter. Beyond just the EPS bait, what underlying trends and their key metrics stand out from recent reports? What tells us about the business health?
Right, exactly. You need to look deeper. Revenue growth has been steady, double digits year over year. Last quarter was up 12%. But crucially, that storage as a service TCV, the total contract value for those recurring services, that was up a huge 70% year over year in the last report. 70%. And their gross margin, operating income, those held up well. Actually, that growing SaaS mix seems to be helping improve margins over time, which is a positive sign.
70% TCV growth. Wow. That's really significant. Okay, so that sauce push is clearly a major theme. Anything else happen during the specific quarter that we should keep in mind for the upcoming report? Any big news or market shifts?
Yeah, a couple of things are worth highlighting. First, they announced a leadership change during the quarter. The CFO, Kavan Chrysler, is planning to leave once they find a successor.
Oh, okay. A CFO transition. Investors always watch those closely.
Exactly. It introduces a bit of uncertainty, something to monitor. And then, as we just talked about, the continued push on storage as a service. Given that huge 70% TCV growth last quarter, everyone will be watching to see if they can maintain that kind of momentum. And connecting it to the broader market, enterprise IT spending seems to be recovering a bit, but companies are still being selective. There's definitely focus on hybrid cloud, data infrastructure, but there's still that macro volatility hanging around. Storage spending is usually a bit less cyclical than, say, buying servers, but it's definitely not immune if IT budgets get squeezed overall.
Right. Makes sense. It's not happening in a vacuum. So what about the analysts covering the stock? Have their ratings or price targets shifted much recently? Are they getting more bullish or cautious?
For the most part, analysts seem to be holding neutral to bullish stances. They definitely give the company credit for executing well. But you do see caution creeping in, mentioning the potential for budget delays because of the macro picture. That's pretty common right now. Price targets have been pretty stable, maybe inching up slightly, likely reflecting those consistent earnings beats. And importantly, no major downgrades reported this quarter, so still generally positive, just with a note of caution.
Okay, stable to slightly up on targets, cautious optimism. Let's shift gears a bit to the technical side. How has the stock itself been trading leading up to this report? And what's the options market signaling?
Sure. Looking at the recent price action, the stock's been trading, well, sideways to slightly up. There's been some mild accumulation suggesting, moderate bullishness. It feels like there's been a sort of bid under the stock, meaning buyers have been stepping in, providing support ahead of the announcement. And in the options market, we've seen slightly above average activity in calls. If you look at open interest, the number of active contracts calls are favored over puts by about 1.3 to 1. So options traders seem to be leaning slightly positive too.
Okay, a slight bullish lean in both the price action and the options. What kind of move are those options actually pricing in for the earnings event itself? What's the implied volatility suggest?
Right, the implied move. Based on current options pricing, the market seems to be anticipating about a plus or minus 8% to 9% move for Pure Storage right after the earnings release. And interestingly, that's pretty much in line with its historical average move on earnings days. So the market isn't necessarily expecting anything wildly out of the ordinary, just a typical significant earnings reaction for this particular stock.
An 8-9% implied move, kind of standard for them. Okay, so bringing all this together, the history, the expectations, the metrics, the technicals, let's game this out. What does a potential bullish outcome look like? What needs to happen for the stock to react positively?
Okay, best case, or the bullish scenario, you'd want to see a clear beat on both revenue and EPS, maybe beating not just consensus, but even that higher whisper number, And crucially, that storage as a service TCV growth, you'd want to see that accelerate again, or at least be very strong, maybe beat expectations there too. If they raise their full-year SY26 guidance above that $3.5 billion mark, or give a particularly strong outlook for future SaaS growth, that would absolutely fuel optimism. And finally, strong commentary from management, really confident about demand, maybe downplaying the macro worries, that would be a big positive.
Got it. Beat, accelerate SaaS, raise guidance, strong commentary. Now, on the flip side, what would trigger a negative, a bearish reaction? What are the red flags?
Right, the bearish case, obviously a miss on the headline. Numbers, revenue, or EPS would be bad. Or even if they just meet expectations but guide towards the lower end of their range for the future. A significant slowdown in that SaaS TCV growth, after it being so strong, that would be a major concern for investors. That's been the key story. Any unexpected pressure on their gross margins would also be negative. And, any hint of operational issues maybe related to that CFO transition, or if their commentary sounds much weaker on overall enterprise IT spending trends, yeah, that would likely hit the stock hard.
It really does sound like that storage as a service TCV growth is the absolute key here, like the main thing everyone's watching. Is that fair to say? The single most important metric?
I'd say absolutely yes. That storage as a service TCV growth is the metric to watch. It's been such a huge driver of optimism, a big reason why the stock got re-rated. Any signs of that slowing down significantly would likely get a disproportionately negative reaction from the market, just because it's so central to their whole long-term strategy and valuation story right now. It's the heartbeat, really.
Okay, TCV growth is the heartbeat. Good way to put it. So let's synthesize all this. Putting it all together, the expectations, history, macro context, technicals, what's the overall takeaway? What's the leaning here? And what should you, our listener, maybe consider?
Okay, the overall leaning, based on everything we've looked at in these sources, feels neutral to bullish. If I had to put a number on it, maybe a confidence score of, say, 7 out of 10 towards the positive side, that's driven by the consistent track record of beats, that really strong SaaS growth we keep talking about, and what sounds like pretty balanced commentary from the company about the macro environment. However, you can't ignore the broader sector uncertainties around IT spending, and that CFO transition does add an element of, well, caution. So promising, but not without potential bumps.
A 7 out of 10, neutral to bullish. Okay. So for our listeners thinking about potential strategies, what are some general considerations, maybe depending on their own risk tolerance?
Sure. So for someone who's generally risk averse, maybe sitting this one out directly through the earnings report itself could make sense. Given that 8-9% implied move and the potential for broader market noise to cause whipsaws, just waiting to see the numbers and the reaction before making a move might be the safer play. Let the dust settle. Now, for someone who's more risk tolerant, they might consider option strategies, perhaps selling an out-of-the-money strangle, which bets the stock won't move too extremely, or maybe buying a slightly out-of-the-money call spread to bet on an upward move, but with defined risk. And for pure volatility traders, well, that implied move of 8-9% is pretty close to the historical average. It suggests options like straddles or strangles might be fairly priced, maybe with a slight lean towards calls being a bit more favored, reflecting that general slight bullishness we saw.
Really helpful breakdown of potential approaches. This whole exploration of pure storage, it really underscores how much goes into analyzing just one earnings report. And it makes me think, how much does a single quarter's performance, the beat or miss, truly tell us about a company's long-term trajectory compared to those bigger strategic shifts they're making, like this whole pivot to storage as a service?
That's a fantastic question, and maybe the most important one. While the quarterly beat or miss grabs the immediate headlines, arguably, it's that fundamental shift in the business model, like this SaaS transformation for pure storage, that often dictates the real long-term value creation. It's about seeing that bigger picture, the strategic direction, which can often outweigh the noise of any single quarter. And that leads to a question for you to consider. When you look at a company, what matters more to your own investment view, the short-term beat, the forward guidance, or that underlying transformation of the business itself?
That's a great thought to leave us with. Thank you for joining us on Investing Talk Podcast. We hope this analysis helps you feel better prepared for Pure Storage's upcoming report. We'll be back soon with another stack of sources and another interesting topic.